few weeks ago, I did a video talking about market volatility, especially in the technology sector. At that point, investors were starting to question whether some tech and AI stocks have moved too far too fast, which based on the trajectory of many of those names was a reasonable concern. But what has been encouraging is how quickly that tone is starting to shift. Over the last couple of weeks, markets have rebounded strongly. On Monday, the Dow crossed 53,000 for the first time and closed at an all-new record high. The Nasdaq also gained 1.1% that day, helped by a renewed strength in AI and technology-related companies. So the same area of the market that had caused some nervousness a few weeks ago was also partially responsible for the rebound. That is a good reminder that short-term pullbacks, although uncomfortable, are a necessary and regular part of market action. They don't always mean something is broken. Sometimes they are simply the market taking a breather after a very strong run. Now, the new issue that markets are watching closely is the latest escalation in Iran. The concern is less about the headline itself and more about oil prices. When tensions rise in the Middle East, especially around the Strait of Hormuz, markets immediately start thinking about disruptions to the global oil supply. And we have already seen that reaction. Oil prices move sharply higher, with Brent crude trading somewhere in the mid-$70 range per barrel. And some reports showed the price of oil being up 5 to 7% as investors weighed renewed geopolitical risks. That matters because higher oil prices eventually flow through to gas prices, transportation costs, and inflation. And if inflation remains stubborn, that can directly affect what the Federal Reserve does with interest rates. So far, over the last few days, the stock market reaction has been negative, but not chaotic. On Tuesday, the Nasdaq fell around 1.2%, the S&P 500 fell about 0.5%, and the Dow fell around 0.3%. That is exactly the relationship we often see when geopolitical tensions rise. Oil prices react first, and the stock market digests what this could mean for inflation, interest rates, and the broader economy. So the message today is balanced. There are still real risks to watch, especially geopolitically, but there are also some real positives. Markets continue to rebound from tech volatility, and major market indices keep seeing all new highs. The most important thing to note is that investors continue to show confidence in earnings, innovation, and the broader economy. I hope that helps. As always, please give me a call if you have any questions.